I've been trading the markets for the past 5 years, and what's kept me profitable throughout my trading journey is keeping it simple, stupid. Trading can be fairly simple, but that doesn't mean it's going to be easy. In fact, trading is very difficult. But if you can follow actionable steps and repeat the same things over and over again every single day, you'll become profitable a lot quicker. So in today's video, I'm going to share with you 3 of the most important price action concepts that I use on a daily basis. So let's get into it. So in today's video, I'm going to be talking about one of my favorite subjects, which is price action, and we're going to be going over 3 of the most important price action concepts that you need to learn as a trader. Number 1 being price control. Price control essentially meaning the imbalance between the buyers and sellers. Who's in control? Is the buyers are in control? Are we pushing price towards the upside? Are the sellers in control? Are we pushing price towards the downside? Or are the buyers and sellers equal, where the buyers or sellers aren't in control? Second being higher time frame alignment. This is very important if you're going to capture a bigger move in the markets. Being aligned with the higher time frames will give you the highest probability setups, and that's where you're going to have continuation as well when you have the lower time frames aligned with the higher time frames. And last one being lower time frame confirmations. This is very important if you want to have a higher win rate. You want to wait for those confirmations on the lower time frames to target those higher time frame levels. So how this whole thing works is that we have to start from the top. We have to start off with price control, and then we move on to higher time frame alignments, and then we move on to lower time frame confirmations. We can't go in reverse. It can't go from lower time frame confirmations to higher time frame alignment. We have to start from the top and head our way towards the bottom. So let's get into price control. So you can see right here what we're going to be talking about is essentially price control. Are the buyers or sellers in control? You can see right here what we're making: higher low, higher high, higher low, higher high, higher low, higher high. This means that buyers are in control. What we're in is what's called an uptrend. When we have bullish market structure, we have bullish order flow, price is consistently making higher highs, higher lows. We're holding market structure towards the upside. This is what we get: a bullish order flow, or buyers are in control. Essentially where we want to be trading is in some sort of trend, either an uptrend or a downtrend. And you can see here what we have is consolidation. So if consolidation, which means buyers and sellers are even, we don't have an advantage towards the upside or the downside. This is consolidation, right? We do not want to be trading inside of consolidation. And on the right hand side, what we have is a downtrend where sellers are now in control. You can see we finally break market structure, price pushes towards the downside. We now make lower highs and lower lows, lower highs, lower lows, lower highs, and then we start pushing price towards the downside. So you can see here in a downtrend, this means sellers are in control. In an uptrend, buyers are in control. In consolidation, that means price is equal. Nor buyers nor sellers are in control. Where we want to be trading is in an uptrend and in a downtrend. These are 2 scenarios where we want to be looking for price to trade. This especially happens on the higher time frames. When we're in consolidation, we do not want to be taking trades whatsoever. A lot of times when we're consolidating, we're inside of a range. This usually indicates chop on the higher time frames, and it's a lot harder to trade when we're in consolidating markets. So we want to be trading within a trend on the higher time frames. So now we can go into the charts to see what this looks like in a real example. So right here, you can see we're on the ES chart. We're on the 1 hour time frame. Whenever I like to draw out these higher time frame trends in the markets, I personally like to either use the daily chart, the 4 hour or 1 hour time frame. As you can see here, what we have is a clear uptrend in the markets. You can see we are clearly making higher highs, higher lows, higher highs, higher lows, and then price, as soon as it gets towards the top of the range, we end up consolidating. We end up consolidating. As you can see right here, we're stuck inside of this range, and once price breaks outside of this range, you can see we start trending back towards the downside. So as you can see here, what we have is 2 clear trends. We have a clear uptrend towards the upside. What we have is clear consolidation, which is inside of its range. And as you can see right here, once we end up breaking structure towards the downside, we end up having a downtrend in the markets. So this is what it looks like in a real chart on the higher time frames. Where we actually want to be trading and participating inside of the markets is when we're in a clear uptrend and when we're in a clear downtrend. Where we do not want to be participating in is when we're in a range. The way I personally trade the break and retest, I love trading in trending markets. Whenever we have consolidating markets, I don't like to trade because we don't have what's called continuation. So we have continuation in an uptrend and a downtrend, but we don't have continuation when the market is ranging on the higher time frames. As you can see right here as well, if I kind of move over the tape and to see where price is currently, you can see how the markets move. The markets always move from consolidation to trend to consolidation and some sort of trends as well. Right, as you can see, right, this was that consolidation phase that we had earlier. Then we had that downtrend in the markets, and then we turned back into consolidation. And now you can see once price broke back towards the upside, we start having that trend back towards the upside. So you can see how it works. Price consolidation, and then we have a downtrend, consolidation again. Once they break structure, we end up having that uptrend back towards the upside. So you can see how these markets move on the higher time frames. As I mentioned again, where we want to be participating in is in these uptrends, right? These uptrends, these downtrends, where we do not want to be participating in the markets is when we're in consolidation. Right? When we're in consolidation, that's not where we want to be looking to take trades. Our best trades will come when the higher time frame is in some sort of trend and we have some sort of clear edge in the markets. So as you can see right here, we're back on the charts, and what we originally had was an uptrend. We had consolidation, and then our first example, what we had was a reversal or a downtrend. In this case, what we had was continuation. So we had an uptrend, consolidation, and then an uptrend again. This essentially means continuation, right? Continuation instead of a reversal, and this is really what you want to be looking for on the higher time frames. When we're in a clear uptrend on the higher time frames, as long as we're holding key levels, we're going to have some nice trading opportunities. So let's go into the charts to see what this looks like on the higher time frames. So you can see we're back on the ES chart once again on the higher time frames, and this is what I love, right? When we're clearly in an uptrend, as you can see, price consolidates, and what happens again, right? We end up gravitating back towards the upside. We have consolidation once again, but we're holding key levels, and then we end up making that next leg towards the upside. So as you can see here, where we want to be capturing price is within these trends towards the upside. Where we don't want to look to trade price is inside these consolidations. If we look to take trades inside this consolidation without any higher time frame thesis, a lot of times what will happen is we'll get chopped around. But if you understand what happens after consolidation, which is continuation, a lot of times if you're able to understand this, right, that's how you're able to capture these nice trends towards the upside. As long as we understand that after consolidation, what we have is potential continuation or reversal, we can capture what's after the consolidation, which is the uptrend. So now with this being said, let's go on to time frame alignment. As you can see right here, we have the 1 hour time frame on the left hand side, and what we have on the right hand side is the 5-minute time frame. So what we're going to be talking about is time frame alignment. Whenever you're looking to trade, as we talked about before, you want to be trading within a trend. So in this case, what we have is a 1 hour trend towards the upside. We have higher highs, higher lows, higher highs, higher lows. We know that price is in an uptrend. So if you know that the higher time frame is in an uptrend, what are we going to be doing? We're going to be going on to the lower time frames and looking for buying opportunities and looking for price to trade towards that higher time frame objective. So as you can see right here, we're on the 5-minute time frame on the left hand side, and what we have is a lower time frame downtrend. So this can be a 5-minute downtrend, this can be a 1-minute downtrend, but a lot of times where you want to be buying in is on pullbacks. So these 5-minute downtrends, these 1-minute downtrends are very good because you want to be looking for pullbacks on the higher time frames. And this is what occurs on the lower time frames. So you can see in the 5-minute, we have a downtrend, right? We're looking at this leg in price towards the downside. On the 1 hour time frame, price ends up tapping into our higher time frame objective. So let's pretend this is the exact same level. Where we're going to be looking for now breaks the structure on the 5-minute or the 1-minute time frame to flip back bullish. Once price breaks structure, now we can look for entries, risking off of the lows, looking for essentially continuation back towards this higher time frame objective towards the upside. So this is what higher time frame alignment looks like, is when you have the lower time frame aligned with the higher time frames. And this is when your A+ opportunities occur. When the higher time frame is aligned with the lower time frames, when every single time frame is aligning, that's when you have those higher time frame A+ opportunities. So now once we understand higher time frame alignment, now we can go on to lower time frame confirmations. So now we can actually go into some examples to see what lower time frame confirmation looks like on the actual charts. So let's go into some examples. So as you can see here, we're on the Tesla 1 hour time frame, and you can clearly see that we were in an uptrend, right? We were in an uptrend. Now what we had was essentially consolidation. And once we ended up breaking structure back towards the downside underneath this key area, now what's going to happen, right? We're in a downtrend now, right? We're clearly making lower highs. We're in a downtrend. Now we're going to be looking for price for essentially continuations towards the downside. So the higher time frame is bearish, right? We're in a downtrend. So what are we going to be doing? Since we understand that the higher time frames is bearish, we're now going to be going on to the lower time frames to look for potential trading opportunities. So we kind of zoom in here. We're on the 15-minute time frame now. You can clearly see that we had a big push towards the downside. This happened to coincide with earnings as well. Now what we have is a potential bear flag. Right, we have a potential bear flag coming into the markets. We have multiple touches here as well. You can see 1 touch, 2 touch, 3 touch, 4 touch. What we're doing is, as long as we reject off this area and remain heavy, we're going to be looking for that next leg towards the downside. So now we can go on to the lower time frames to confirm our entries and our thesis on the higher time frames. So right here you can see we have the first 5-minute candle played out on the 5-minute time frame. In this case, I'm not bullish nor bearish. As you can see, we're inside the middle of the range. So as you can see, whenever we're inside the middle of the range, I want to wait for that 5-minute opening range break. If you guys haven't watched my last video, I highly encourage you to do so after this, where you understand how you can use one candle to help with your trading. So what we'll be doing is marking out your opening range low and your opening range high. And now we can play price out. You can see price right here, right? Tried closing above, didn't really have a strong candle closure, immediately rejected. And you can see also tapped into our higher time frame key level as well, right? And of course, we're not going to look to long price because we have a higher time frame bearish thesis. So now we'll be waiting for the break underneath your opening candle print. So as you can see right here, the reason why I will be looking for potentially underneath your opening candle print low instead of your opening candle range high is due to the fact that the higher time frame is bearish, right? In this case, if the higher time frame was bullish, I'll be looking for long positions off 230 for continuation towards the upside. But in this case, I'm bearish. So I'm going to be looking for shorts underneath this level because we have a higher time frame bearish thesis. And once we get underneath your opening candle range low, what do I expect? I expect continuation towards the downside because of the higher time frame thesis, right? If I don't have the higher time frame thesis, the opening range candle really doesn't mean too much in itself. Once you have it in combination, working with multiple confluences, you have the higher time frame thesis, you have time frame alignment, you want to go into lower time frames to look for potential confirmations. So now we're underneath your opening candle range. So now we can look for potential short opportunities towards the downside. So now after this big push towards the downside, right, I'm going to be looking to short off of your opening candle range low. The reason being, as I mentioned, is everything that I outlined earlier because of the bearish thesis, because now we're underneath the opening candle range low. You can see we're also coming back into areas of order blocks, right, your pre-market low as well, where I expect price to start staying heavy, and then we have that continuation towards the downside. In this case, the areas I'm going to be looking to target, number one, your previous day's low, and then of course, right, your next objectives, which is the day previous low as well, which would have been your Tuesday's low. And I drag it all the way down here, and I'll be looking for that continuation based off of that higher time frame objective. And as you can see right there, we end up capturing a super nice push towards the downside on Tesla. The reason why we're able to capture this move, as I mentioned earlier, is based off of the higher time frame thesis. If you're so fixated on the lower time frames, you're never going to be able to capture these type of moves in the markets. You have to be able to analyze all three things as I mentioned, right? You start off, what's the market structure on the higher time frames, and then you want to look for time frame alignment, making sure the lower time frames is aligned with the higher time frames, and then you want to look for the lower time frame confirmations. So now let's go on to the next example that I have. So as you can see right here, we're on the Nvidia higher time frames, and you can see we were clearly in an uptrend. As you can see right here, price is continuously making higher highs, higher lows. Right here, what we have is the consolidation, and now you can see once we ended up breaking structure right here, we start trending towards the downside. So you can see right here, we're clearly in a downtrend now on the higher time frames. So what we're going to be looking for is that next leg towards that downside to essentially that original consolidation point. We're going to be looking for that continuation towards the downside because the higher time frame is bearish. We're in a clear downtrend in the markets. Now we're going to be going to lower time frames to align ourselves within that higher time frame alignment. As you can see right here, what we have is a clear downtrend in the markets. We have a clear downtrend in the markets, and now what we have is consolidation on the lower time frames. In this case, we're making what's called a bear flag, right? We're consolidating on the lower time frames. Now, after consolidation, what can you expect? Right, you can expect that next leg towards the downside because the higher time frame is bearish. We just consolidated on the lower time frames. Now we're going to be looking for continuation towards the downside. So with this thesis in mind, we're going to be looking to short Nvidia towards the downside. So as you can see, we're on the 1 minute time frame here, and what do we have? So we have an uptrend on the 1 minute time frame. So we have a 1 minute uptrend in a higher time frame downtrend. So if the 1 minute is bullish, what we're going to be doing is looking for a break of structure on the 1 minute time frame to look to kind of short towards the downside on those higher time frame objectives. So as always, we're going to mark out our opening range candle. In this case, we're on the 1 minute time frame. If we're bullish, where do you want to see price above? You want to see it above your opening candle print. But in this case, we're not bullish because we have a higher time frame thesis towards the downside. But if we're bearish, where do you want to see price? You want to see price underneath your opening candle print low, retest, and a continuation back towards the downside because of our higher time frame thesis. If we play the tape here, you can see price so far hasn't closed underneath, right? Super strong candle closure underneath. So we have that candle closure underneath now your opening candle print. So now what we'll be looking for is a retest of your opening candle print for that continuation towards the downside. You can see price popped all the way back here, wicked above, wicked once again. So you can see price wicked once again right into our key area. That's where we're going to be looking to short with stops just to break above. And where are we going to look to target? In this case, we can zoom out a little bit and you can see we're going to be looking to target your previous day's low, which is our first target. We'll mark this out right here. And our second target will be essentially the day's previous low, which is your Wednesday's low, all the way towards the downside. So we can play this tape out here, right? As I mentioned, this is due to the fact that we have a higher time frame thesis. You can see price, right? Very nice push all the way towards the downside, towards that first key level, which is your previous day lows. And you can see right there, price ended up gravitating down towards the Wednesday's lows as well. So as you can see here, this is how you incorporate all three price action concepts. You have to use three in combination with one another. One doesn't work without another, right? You can't go onto the lower time frames without looking into the higher time frames. You can't buy a trade off the higher time frames without going onto the lower time frames. With that being said, I hope you guys enjoyed the video. If you did, I appreciate it if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.